Welcome to electronic payments for convenience, buying power, and better financial management. In this video, we're going to cover the pros and cons of the most common types of payment cards. In today's economy, people use payment cards more than checks or cash. They do this because payment cards provide payment options that are more convenient and much safer than obtaining and carrying around large amounts of cash. Payment cards also reduce costs. For instance, eliminating the cost of ordering printed checks, the risk of bouncing a check, or paying for checking overdraft charges. Payment cards will also help you track your spending with itemized records of your purchases. As the use of electronic payments continues to expand, you'll need to decide which card is best for your situation, because not all payment cards are credit cards. You have a number of card options for making electronic payments. First is a prepaid card, which is your own money loaded onto a card. Next is a debit card, which lets you access your own money from your bank account. Finally, there are credit cards, which work like a loan because you're borrowing money from the bank that issued you the card. Many purchases require a credit or debit card. Unfortunately, not all of us have one. Prepaid cards may be a convenient alternative to these forms of payment and to cash. The first thing to know is that not all prepaid cards are gift cards. Gift cards have a set dollar limit, and once the amount on the card has been used, it cannot be used again. What we're discussing here are reloadable prepaid cards, which is your money loaded onto the card. You have a number of different options to reload your prepaid card, including at certain stores, online, transfers, or even at some banks that offer that service. And you can add funds at any time. You'll find a lot of advantages and protections associated with using a prepaid card. One advantage is that you don't need to have a credit history or a bank account. These cards can be used anywhere credit or debit cards are accepted. There is no way to get into debt because you set your own card limit based on funds you've put on the card. It's also safer than cash because if your card is lost or stolen, you can easily get a replacement card with the funds you had available to you. Some disadvantages may be fees associated with the card, which might include fees for reloading, a monthly fee, or fees for getting cash at ATMs. Our recommendation is to carefully review the details associated with the card so you have a better understanding of the fees. Do some research on which cards have low startup costs and low fees. Once you select the card with the best benefits and protections for you, take a moment to register it. Finally, always monitor your card balance. That way you're not caught off guard when trying to make a purchase. A debit card lets you access your own money in a bank account. Because it is linked to funds you have in an existing checking or savings account, it reduces the possibility of overspending. The benefits of a debit card are that, unlike a credit card, a credit history is not required. As long as you maintain a balance in your checking account, you can use your debit card. It is your own money to pay for things everywhere payment cards are accepted. With your debit card, you'll have easy access to cash through ATMs or cash back at stores, and you're protected from fraudulent transactions. A drawback of debit cards is that they don't help you build a credit score. Overdraft fees can also be expensive for debit card customers who exceed their account balances, so it's important to keep track of your purchases and monitor your bank balance to avoid overdraft fees. There may also be fees if you use your debit card to withdraw cash at ATMs that are out of your bank's network. One way to avoid ATM fees is to try to get cash back with debit card purchases you're making at stores, where there are usually no fees. It's important to understand all the details of debit cards and weigh your options carefully. Credit cards work like a short-term loan. Essentially, you're borrowing money from the bank that issued you the card with the understanding that you will pay that money back later. It's important to note that you'll want to pay off your monthly credit card statement in full. If you carry a balance from month to month, you'll be paying interest on the balance and sometimes additional fees. One big advantage of having a credit card is that it helps you establish or improve your credit score, and it can be very useful in case of emergency. Many credit cards offer benefits for using them, such as rewards and additional services, cashback, insurance coverages, identity theft resolution, and satisfaction and price guarantees on purchased items. Credit cards also provide the opportunity for you to reverse a charge for goods or services that you find unsatisfactory. This is called a chargeback and is done through the bank that provides your card, in most cases without requiring direct confrontation with merchants or service providers. Also, credit cards protect you against fraudulent charges in case your card or account information is stolen. A common drawback with credit cards is the risk of incurring a large debt and the fees associated with it. Also, paying your card balances late is a fast way to harm your credit score. And typically, you'll pay a higher interest rate for cash advances. Credit cards can help you build your credit score, but remember that the lower your credit score, the higher the interest rate applied to your unpaid balance. We encourage you to find cards with fees and rates that work for you. Many credit cards have annual fees, especially if benefits and rewards are a part of the offer. Do your research and weigh the amount you'll need to spend to receive rewards against the amount of the annual fee. When using your card, be sure to monitor your transactions and balance, and to report any fraudulent activities immediately. Again, remember to pay off your monthly statement in full to avoid paying interest and possibly additional fees. Depending on which phone or device you use, you may have access to a mobile wallet, which virtually stores payment card information directly to your mobile device. A mobile wallet, such as Apple Pay, Google Pay, or Samsung Pay, is an app that stores various types of payment cards so that you can pay for things using your mobile device. To use a mobile wallet, you'll download the app on your phone and add the information about your selected payment cards. When making a purchase, you'll use your mobile device to pay at a store using contactless technology. The information stored in mobile wallets is encrypted, so your debit or credit account details are secure. When the mobile wallets transmit data to make payments, they never transmit your actual account numbers. Instead, they use encrypted payment codes. And since most mobile phones also require a security code to open, it's tougher to get your information. Some drawbacks to using a mobile wallet is that, as a new technology, it may not be accepted everywhere yet. Also, some fees that the merchant pays may be passed on to the consumer. But the biggest drawback is that you have to make sure your phone is charged. When choosing a mobile wallet, make sure to research all the fees involved and which merchants will accept the payment option. Thank you for watching this video on electronic payments. For more information, please visit our website at masteryourcard.org.